Hey everybody, welcome to episode 63 of Stock Talk with Josh and
Nico.
Nico. What's up, man?
Oh, nothing much. Just hanging out here and drinking some coffee. I'm excited to have Paul back on the show. It's been over 4 years. Paul will tell you the exact number of days it's been, but I know it's been at least 4 years.
Yeah,
And
Days is
so,
crazy though. Days is crazy, but yeah, round of applause for friend of the show, Paul, for coming back. Thank you for coming back and not like hating us too much, Paul.
yeah.
Thank you. Yeah, I'm glad to be back. It's been too long, so finally we found a day that we can make it work.
Yep.
So I'm here and ready to talk about whatever the topic is.
All right. Well, I think we should start with talking about Paul. What have you been up to as far as investing and anything business related? Crypto, stocks, whatever. What has been your thoughts and your strategies lately?
Well, I'm not really an individual stock picker or anything like that, or at least I wasn't until recently. I mostly just index all of my money. Because I think in general, it's really difficult to beat the results you get from doing that over a long term period.
Mm-hmm.
But lately, I've been watching a couple names. EOS Energy, I think I'm pronouncing that right. Ticker is EOSE.
Yes.
That's one that I like a lot. I actually sold all of it. I bought EOS. My weighted average cost per share was something like $2.20 or $2.30, and I sold all of it at like $4.50.
Nice.
And I regret that because I think
It's at
it's
490
gone up
now.
since then. But this is I believe they're a graphene or graphite battery producer. I should probably know which chemical it is, considering that I own the stock. But it's an alternative to lithium ion batteries, and
Huh.
I think they have a couple contracts with the Department of Energy or something like that, some government money. And I know they have a large loan that they don't have to start paying interest on until either 2027 or 2028. And I think that boosted the share price for a little bit. They also have investment by Cerberus, which is a pretty well-known private equity firm. So, I mean, all the signs are there. I think when I sold it, though, it was trading at like 180 times next 12 months revenue or something crazy
Wow.
like that. So the market predicted, and it was like 18 times last 12 months revenue. I'm sorry, I just told you those backwards. But the market had it priced in that they were going to 10x their revenue in a
Mm-hmm.
year, right? So I saw that and I was kind of like, I don't know if they can. I mean, any company to make 10 times as much revenue the next year versus the year before, or the next 12 months versus the previous 12 months is a really hefty thing to do. So I sold it, but the price ended up going higher and higher though. I think now it's like around $5 or something. So it calmed down, but at one point I think it was over $6. So
Yeah.
we'll see. I'm going to be really interested to see. I think they report 4Q in like a week or two, or a week and a half or something towards they're going to issue their 10K towards the end of February. So I'm really going to be. I'll definitely read the 10K, and I'm going to well, not read it, but I'm going to scan the 10K and look at the financial statements, right? And I'll be interested to see what the share does when they report, what the share price
I
does when
mean,
they report,
even
rather.
though it ran up to $6, I think you still can't complain that you got the gains that you did because if you got,
Oh, definitely. Yeah, yeah, for sure, for sure.
yeah,
It's yeah, yeah. I mean, double the money or close to that, whatever it was. You can't complain. Like
right,
it's you can always like hindsight's 2020, right? So
yeah,
you can't really get stuck on that stuff. But
right,
I'm definitely looking to enter into it again. If we'll see, maybe if they because I think the long term story is there. That they um they have they have these big contracts coming online for power generated through these batteries, right? And long term, I'm bullish on it. And if they come in below the street consensus or whatever, if they negatively surprise Wall Street and the share price dips down again, I may buy back in. So
yeah. Okay, we need to talk about my favorite stock as of the last month and a half here, and I told both of you guys this
You did
was.
tell me. You did tell me.
I
You did tell
texted
me.
both of you guys about
You
this
did.
company, but
This might be the
unfortunately, wait,
first.
wait, wait,
This might be the first. No,
unfortunately,
real quick. This
only
might be the
one
first
person,
one.
only
Paul,
one
no, no, no,
person
no.
texted, only one person I texted actually took my my not financial advice, but they copied my strategy, let's say. And that person that chose to copy my strategy made a lot of money. The other person, on the other hand, that did not take my strategy, they did not make a lot of money.
Well,
We're
congratulations.
talking about Super Micro, right?
We are talking about Super Micro.
This might
Yeah,
be the
see,
first
that one is
company
that
you
was
do.
a unique. Go ahead, Josh.
This might be like the first company like Nico chose that like actually went boom.
Get out of here! That
Like,
is
okay,
not true
congratulations.
at all.
Like I got AMD and
Get
Nvidia. I got
get
so
out of
many
here.
companies, but congratulations, bro. Congratulations.
Get out of here. That is not true
But
at all.
go ahead.
I
Paul,
think
go
Nico
ahead.
told me to buy. It's that Dutch company that makes the
ASML.
Yes,
Yes.
yeah.
That's
Nico
still
told me to buy that, and at first I took a bath on it, but now I think I'm in the green.
no.
on
That
ASML.
thing. Okay, that
But-
thing is anywhere between what 650 and 750. That thing is a buy. That thing is.
Oh, for sure. Yeah.
that-
That's one of the stocks that you can't even really look at the price like month to month. you
yeah.
know?
No, that thing is $1,000 stock. So I don't want to hear.
Yeah,
I don't want to
yeah,
hear
yeah,
that
yeah.
one hasn't gone up.
It's a
yet.
good long term. It's a good long term hold.
Yeah, but we need to focus on SMCI because that one has been amazing lately. And Josh, I
Well-
wish you would have bought into that because the story in the last couple months has been insane with all the. First, they got accused of fraud, and
That's what I had saw too. Yeah.
right.
That's right. Hindenburg published that. Which, by the way, Hindenburg, the guy shut his firm down recently. I don't know if you guys heard about that.
I didn't know that.
It doesn't exist anymore. He
That's
shuttered
a huge.
Hindenburg.
That's a huge organization too.
Uh,
They're big.
I mean, it was definitely a well-known, like, short seller shop.
Right. No, I mean
right?
when
So-
they normally put out articles on stocks, the stock normally has a big move based off of
Yeah,
their
yeah.
report.
Roblox. The most recent one they did, I think, was Roblox, and I read the report, which was funny. You guys should read it if you haven't. But
Yeah.
and funny and shocking too. But
Yeah.
when that report came out about Roblox, I think that the stock was down for like a day or two, but
Mhm.
it doesn't seem to have any. It doesn't seem to have really done anything long term. I think that stock is going to remain largely unaffected by Hindenburg.
Yeah.
But SMCI wasn't. The guy behind Hindenburg, whose name is escaping me, published that report, and the stock price dropped dramatically. Their auditor, which was Ernst & Young, resigned, which is like a horrible signal to the market, right?
Yeah.
And but then they did this internal investigation, and well, it was a I say internal investigation, but it was conducted by both internal and
An
external.
outside thing. Yeah.
Yeah. So it's not a completely internal thing, right? And apparently there's no evidence of fraud.
Yep.
So
And because they didn't release the 10K for last year, and so they were going to get delisted, but they said that they're coming up with a plan or whatever, or they're working on coming up with these things so they don't get delisted. So last week when me and Paul were talking about this on February 11th was the day they reported earnings. It looks like
yeah, it was last Tuesday.
well, yeah, that was a weird day because I honestly was expecting them to have good news and having the stock shoot up, and that's not what happened. It kind of just like went up a little bit and then it went back down a lot. It went down 8% after hours or something because they technically their EPS was a beat, which was good, but their revenue they had a slight miss. But
Yeah. But then they go ahead, Nico.
well, the rest of the week here now, ever since the days following that, the stock has been tremendous, right? I think it went up. It's up another 15-20% in these from the last couple days of last week. So I think I'm up 75%. Paul, I think you bought in at what, $34?
I can check for you. I think my average.
I think
I think it's higher than what yours is. Let's
Yeah.
see. I'll look at my brokerage account.
yeah, but luckily you still got in at a good time. I think around that under $35, I think is still it's cheap enough.
Yeah, $34.91.
Yeah, but once you start getting, so I think we're the stock's at 47 or 48 right now, and so I sold a little bit. I sold 5 shares or 10 shares or something. I think I sold 10 shares, and so I'm planning to hold most of my shares until the stock goes past 50, past 60, and then once it gets close to $70, $80, then I'm probably going to be completely sold out because at that point the valuation will be justified enough for me. But the
I think that's probably a good plan.
yeah. And the numbers look outstanding. They're supposed to grow 60% this year and then like 25% next year or something.
Yeah, their
So-
guidance, because on February 11th, the way I think about that is that there was really three three important pieces of information, and the net effect of those three, I think, was largely neutral, right? So
Yeah.
piece one is that there was a slight negative surprise for 2025
Yep.
results, right? So, I mean, it was slightly negative, but it was pretty much balanced out by their guidance raise for 2026, which was big, right? I forget the exact numbers, but they raised guidance for 2026 big time. And
Yep.
then the third piece, the one that like everybody was like, laser focused on, is like, are they going to hit this filing deadline, right? Because I don't think we've said it yet on this episode, but if they don't file their 10K for fiscal 2024 or fiscal 2025, whatever it is, because they have their fiscal year ends in it would be fiscal 24,
right? Yeah.
Yeah, their fiscal year ends in
Which
either
I hate
June
when
or
they do that.
September.
I
Right?
hate when they do that. I hate when companies have that.
I know, yeah, it's confusing, but it's their fiscal year ends in either June or September. I think it ends in June, and they have until
February
25th to file, right? And if they don't file, they're going to get delisted, which I mean, I don't know what the price. You're not going to have an actively quoted price anymore if they get delisted, right? It's going to be an OTC stock. That's like horrible. Nobody wants that outcome, right? It would be awful if you're a bag holder. But so anyway, the reason I say that is that the third thing they said on 2/11 last Tuesday was that they believe that they're going to hit the deadline. They're working hard towards it. Blah blah blah. They basically said, they didn't say anything bad, but they didn't say anything good about it either, right? They didn't say like, oh yeah, we're going to hit it, right? Which you expect, right? If you're like, the CFO of a big public company, you're never going to say something like that until it actually happens. You know what I mean? So I think that was also largely viewed by the market as neutral. So the net effect of all that was like a slight positive with the 2026 guidance. But the $1 million question for me is that, what's the probability that they hit? What probability of them hitting the February 25th deadline is priced into is priced in right now, right? Like, is it 80% probability? Is it 90%? I mean, it's definitely over 50, right? It's likely that they're going to hit the deadline, but I'm just wondering if there's going to be. I'm wondering how much juice there is.
Let's think about it. This is how I think about it. Think about it like this. So peak fear for this stock the last couple months has been $18 a share, right? That was its bottom, and that was when all the bad news was in the market. That was when there was the company with the fraud and the 10K wasn't reported, all that stuff. That was all the bad news priced in at $18 a share. Then it went back up, and we spent some time in the $35 range, $40 range. So to me, that's right around neutral, right? And now this past week, we're gaining a whole lot more confidence. And as we go, now we're at $45, $47 a share. Now the confidence is a lot higher. And then once we lock in the fact that the 10K is reported, they're not getting delisted, everything looks good to go, then I think we're going to see $60 a share, if not higher than that. Because the numbers are great. They're in a great industry. The products are great. My uncle who makes computers, he said the products are one of a kind. They're amazing. And they have partnerships with NVIDIA.
Yeah, I've heard good things about the products.
And you told me they work with Cleveland Cliffs as well, right?
Yeah, that's right.
Yeah. You see, so once we have all these positive catalysts going in the right direction like that, then the stock should easily be $60. And so that's going to be, you could have 4x, I guess 3x to 4x your money within a couple months.
Yeah, I mean, they're pretty much like they're like a sister company to NVIDIA almost. Mm-hmm. I think the founder is really good. He's either like the cousin or like really good friends with the CEO of NVIDIA.
So I guess does the whole family own the entire chip industry? Because I thought AMD and NVIDIA CEOs were cousins too.
Yeah, you know what? I think that's what I'm thinking of.
Yeah, they are.
I think the Supermicro guy is just a friend.
He's just a friend. So family and friends own the whole entire chip industry.
Yeah, exactly.
That's hilarious. That family's got to be rich. They got what, $8 trillion worth of industry in their family.
Yeah, no kidding. I read somewhere that like 60% of the employees at NVIDIA are millionaires. Something crazy like that.
Yeah, I believe that.
Because of the equity compensation.
All right. The next one I got on my list here is Palantir. But before we move there, Josh, is there anything you want to start with?
I just messed up. I should have listened to you.
You should have.
I should have listened to you. No, that's fine because
It's-
there's a lot of times you don't listen to me, so that's fine.
That's not true. I'm holding AMD right now. Are you holding AMD?
No.
Okay. Well, I don't know. Now seems like the time to buy it when it's pretty much
Yeah,
cut in half.
True. I-
So
But yeah, that Palantir stuff is kind of crazy.
Palantir has been crazy, and I mean,
Like, have we seen a stock like go up like probably like cryptocurrency, but like that's up like 350% from
Yeah.
a year. Like that's
and so I mean, my only experience with this company has been when it went IPO. I bought in at pretty much the cheapest price. I think I got it at $20 or whatever, and then I probably sold out within a couple of weeks or a month or something, and maybe I made 10% or something, but I pretty much sold around the same price. Just because I was scared, I think, and I think because the valuation has always been kind of scary. It's been a Kathy Wood stock, which all the other Kathy Wood stocks pretty much fell
Yeah,
down big
bad
time.
news.
Right, exactly. So, but I mean, the interesting thing with Palantir is that they were one of the first ones these last couple years that came out with the whole branding of we use artificial intelligence because
True.
this was
Yeah.
this is what at least 3
yeah,
years ago.
2022.
Yeah, I think this is at least 3 years ago. But I mean, it's obviously it's an interesting company, and they got the contracts with the government and stuff, so they got a pretty significant moat there. But Paul, what are your thoughts on this one?
I don't really follow the stock enough to have anything that's valuable to hear. But I mean, I bought that stock a long time ago, like 2020 or something like that, and I just recently sold after it had that crazy day. I was like, okay, the PE, I can't remember if it was the forward PE or not.
I don't
but
think it was
one of
forward. I think it was trailing.
I think you're right. The trailing PE was like 400, and I was like, okay, like there's no way that this is gonna. The valuation just seems ridiculous to me. I don't know. Are they still pre-earnings company? Do they still burn cash?
Let me check. I would guess they are profitable.
I think so.
I would think they're profitable at this point. They've
Yeah, because their whole thing is like defense contracting with data, right?
Yeah.
I honestly don't even know. It's embarrassing because I held the stock for so long, but I don't even
it's
really
supposed
know.
to, well, okay.
I don't know what the fundamentals of their business are.
Well, the thing is I hear a lot of people that hold this stock, they don't even fully understand the business either. So I don't think for 99% of people, it's not an easy stock to understand. But it sounds like it's artificial intelligence with software, and they work with the government because they're supposed to be fighting terrorism, preventing terrorism, and then they also have a commercial and business side of their business as well, where they work with different businesses. But it sounds like it's just AI software, pretty much to help make better conclusions or come up with better solutions for. In case of the government, it's fighting terrorism, but they also have a business side of it too. So, but I'm trying to pull up.
So that description is so vague that it's
Right.
practically meaningless, right?
Yeah.
And I think that the thing is, if your government is the main customer, then like the scalability can be crazy,
Right. Yep.
right? Like that's one of the reasons that I like
Don't say
EOS
Boeing
so much, right? Is that they have all these investments from the government, and the if you can convince somebody to sign you a check, then you just have access to all this.
All right, pause.
You have a blank check
here,
for
okay.
tax.
So let's now okay. Let's
my favorite company.
let's acknowledge here for a second too that although the government factor is a huge positive for a company or for a stock, pandemic time when I was buying Boeing, and I probably made some money with Boeing, but Boeing is one of those two that one of the best cases for Boeing is that they work with the government, right? Which again, it's a great thing to have, but that does not mean that you're suddenly just the stock's going to lift off, because look at the last 5 years.
No,
for
that's
Boeing.
true. There's risk too.
Yeah.
Like, if Elon Musk decides that he doesn't like the Palantir guy, he could,
Yep.
It seems like his power just grows by the day.
I
So
know,
he
right?
could just cancel all the contracts, and then Palantir's stock price is gonna fall.
So
now that's true, but you gotta also understand it's risk in every single company you invest in. I just think
Yeah, there
like a company with
is.
Boeing when it has that government backing, It's more like a safeguard.
It is 100%. But
what I'm
all
looking
I'm saying, it's a safeguard. But all I'm saying is that does not mean that that stock is going to outperform, or it's not. I mean, look at Boeing. Boeing has been a complete disaster the last 5 years. You're not making any money if you held Boeing for the last 3 or 4 years.
Yeah, it definitely. I agree with Nico. It definitely doesn't. It's not a guarantee that the stock's going to outperform. That's
Now,
for sure.
As for Palantir, Palantir has been profitable since Q3 of 2023. So we're going on almost 2 years now where they've been profitable. I mean, but unfortunately, the last year though, it looks like the net income is not growing too much. The net income was actually down from Q3 to Q4 of last year. And keep in mind, we're talking what, about a $500 million of bottom line profit, and the market cap on this company is now, what are we looking at? Something ridiculous. It is
Let's hear it.
$271 billion. That's way more than I was expecting. I thought it was going to be under 100. $271 billion for a company that only does 400 million in profit. That's ridiculous. But this leads me to another topic I want to ask you guys about, because last week my boss who I work for, he has been a buyer of this stock for a long time, and we were talking about this, especially relating to PE ratios and how you got stocks like Tesla, Nvidia, Palantir that trade at these valuations of hundreds, a PE of 200, 300, 400, whatever. And he was kind of saying in cases with these companies where they're these innovative companies, it almost doesn't matter to pay attention to the PE ratio. Now, for me, I feel like I kind of disagree with that, but he has a point to some degree, because it's almost like it's just the stock can, whether we're talking about just hype, like you hype up GameStop or something, or GameStop, you can also just have these delusions with these investors where they buy these companies up, and it's like, where do you draw the line between, like, can Palantir actually trade at 400 times earnings sustainably? Because it's been trading at 200 times earnings for the last couple of years, so it's like, where do you draw the line between how do you justify it? You know what I mean?
I mean, I agree and disagree with the comment that your boss made about PE. Like, it's, of course, like, it's all relative, right? I mean, these companies have huge growth potential, and that's why the valuation's ridiculous, right? I mean, I don't know. I need to do more research on Palantir, but from what I understand, the scalability is just crazy. That's why the valuation is so high. Like, same thing with Nvidia, right? The new Blackwell chips, the AI chips, all this stuff. The applications are just so broad. It's almost, it makes me think of like when it makes me think of like Microsoft or something. These are businesses that are going to end up touching the lives of, hundreds of millions, if not billions of people, right?
Well,
I mean, think about the amount of people who use Microsoft OS every single day. That number's got to be in the billions,
yeah,
right?
but
That's why Bill Gates is
the difference
fourth richest guy on earth or whatever.
Okay, but the difference is Microsoft is actually doing those numbers to support that. So my question would be, let's say Palantir can scale to those insane numbers. If you're pricing that in right now and you're pricing in the next 5 years, like the money they're going to make in 5 or 6 years from now, then there's no money to be made then. Okay, sure. Let's say
exactly. Yeah.
Right?
Nico, what you just described is like the concept of like whether, like, if you're going to pick individual stocks, I don't think it really matters whether or not the company's business is quote unquote good or bad, right? In terms of like, the risks it's exposed to, how, really, how risky it is, right? Or how good the management is, et cetera, et cetera. The only thing that matters is whether it's a good or a bad price, right?
Yeah.
I mean, even if you think that Supermicro it was way overvalued before when it was trading above $100 a share, and that the whole partnership with Nvidia is smoke and mirrors, and their servers aren't that good compared to, like, let's say, I think their chief competitor is Dell, right? So Dell's servers are better, blah, 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 blah. Even if you believe all that, Supermicro was still a good buy at $18, right? I mean, it was just undervalued. The market had overreacted to the Hindenburg report and to Ernst & Young resigning. You know what I mean?
Okay,
and alternatively, you can have a good stock, right? Like a stock that a bulletproof, or I'm sorry, not a good stock, a good business, right? Like a bulletproof business. Like for example, Walmart, that business is going to be around till till the nukes start to fly, right?
Yeah.
But if Walmart is priced fairly, right, or if it's priced in accurately, like all the future cash flows are all reflected accurately in the stock price, then there's no juice there. There's no money to be made. Like, why would you
Right.
buy it,
Yeah.
right? You need to look for if you're picking individual stocks, you have to buy ones that you think are
Okay,
undervalued.
but let me ask you this. Here, this is my question. Is there anything that requires to bring the stock back down to a realistic valuation? And where do you draw the line between, like, okay, let's say is Tesla, let's say some of these companies, Palantir, Tesla, Nvidia, yes, they are innovative, yes, there's huge scale opportunity and all that stuff. But where do you draw the line? So can Palantir trade at, right now it's at 270 billion, right? Can Palantir trade at a $5 trillion valuation? Like, could it 5x, 10x from here? You know what I mean?
That's all dependent. The best way to figure out like where you draw the line on your valuation, like whether you think a stock is underpriced, fairly priced, or overpriced, would be to just and I know this is easier said than done because everybody's doing this and they have much more everybody's doing what I'm about to describe, and they're much more sophisticated than how a little guy like you or me would do it, right? But you would have to do like your own like discounted cash flow in Excel, in an Excel sheet, and plug in what you think are reasonable assumptions, right? Like how is this company's revenue going to grow over the next 10 years, and then what's the terminal growth rate going to be? How are expenses going to grow?
Okay, but wait.
What's capital expenditures going to do, et cetera, et cetera.
But
right?
I'm saying, how do you know what to do when these stocks don't care about valuation, and investors will keep throwing, even the hedge funds and stuff, they keep throwing money into it. And like how you said, a Palantir at 400 times earnings is ridiculous, right? Most stocks are trading at 20 or 30 or 40.
Yeah, the growth that's priced in is crazy. Yeah.
Okay, but where do you draw the line? Like, how do you know what to do with the stock then? Even if you make your models and you say, okay, it should.
Well, you pretty much don't, right? Like that's why half of the most sophisticated hedge funds fail to beat the S&P 500 every year.
Yeah.
So I think the answer to that is you kind of don't. I suppose there's ways to sanity check it, right? Are there certain conditions that could exist to give Palantir a justifiable $270 billion valuation? Yeah,
maybe.
Do I know that if those conditions really exist? No. I just don't know enough about the assumptions.
How are you going to know when to? But let's say Palantir, for example. How are you going to know when to buy and sell if the stock's trading at 100 times earnings right now? Are you going to say, oh, well, this stock could go to 400 times earnings. I could 4x my money. Or it could go down 75% and now we're trading at 25 times earnings. So how do you know when to buy and sell the stock?
I think the answer is that you really don't.
Yeah.
I know that's not what you want to hear, but I think that
I think you're right.
I think the answer is that largely you don't, and a lot of people don't. And really, if you look at a long-term graph of these stock price movements, it's just extremely difficult to beat the market overall over a long period of time especially when you're in speculative stocks like this. You know what I mean? And there's really sophisticated ways that I'm not even going to pretend to understand that hedge funds and proprietary trading companies use to trade these based on what's happening with the volume of the stock, what's happening with the bid-ask spread, et cetera, right? And for investors like you or me, that's just you're never going to get ahead of stuff like that. But I think that it's also, well, the problem is that a lot of times when big players buy these stocks, you don't know until there's no juice left, right? Mm-hmm. Like Nancy Pelosi, who's famously is an amazing
one of the best stock pickers
investor
of all time.
Yeah, one of the best investors alive, right? I don't think that she has to disclose her buys and sells until 60 days after they happen.
It's every quarter. I think it's every quarter.
Yeah, every quarter. So then, that's useless, right?
Well, no, I don't know. I don't think so. No, it's not. It's not useless because if I know what all of them bought just a month ago or 2 months ago, that can tell me a lot. That can tell me what they were thinking back then. That can tell me what the valuation was, whether the valuation was a good buy a month or two ago.
I suppose that's right. You could kind of see especially if you have to report a full quarter, and you can look at the the most recent stuff and
Yeah.
see like, okay, well, if they're bullish on these couple stocks a month ago, you
Right.
can extrapolate that based on whatever news has come out about those stocks recently and try to trade on that.
And
But
yeah, and a lot of times you see the stocks they bought. Let's say they bought Google and AMD or something a month ago, and now it's a month or two later. The stocks are down even further, so you feel even better about buying those stocks at a cheaper price. So
I mean, I think with Palantir, I don't see myself buying the stock unless I get like blinded by some crazy hype train. But I don't see myself buying the stock anytime soon. I think it's going to be,
It's way too high.
we're at an all-time high. Are we at an all-time high now?
for Palantir,
I think we are, right?
Yeah, we're at 118 a share.
Okay, my prediction is that in 2 years that's gonna come down. I just don't. I think that AI is close to fairly valued, if not a little bit overvalued.
Yep.
But they really just have to be able to. They have to turn all this this growth story and all these fancy speeches by the CEO, who's like this guy with this Albert Einstein hair.
Yep.
He looks like a mad like a mad genius or something. You know what
Yeah.
I mean? All that's fine, but that has to translate into them actually generating cash. You know what I mean?
Well, that's what I'm
it-
trying to ask you. Is that true? Is that actually the truth though? Because can this thing stay at this valuation for the time being? You know what I mean?
I don't know how long I mean, eventually, if a company doesn't make money, the stock price has to go down, right?
You think so?
But the key word there is eventually. Like, how long did Uber,
Yeah.
trade at a high price without making? Didn't Uber just start making money 2
Yeah.
years ago or something?
Yeah. There's a bunch of them. Go look at these other software AI companies. Monday.com, Snowflake. There's a bunch of them out there that trade at billions and billions of dollars, but they don't make money. And the stocks
Well,
are
the thing is too, right? Like okay, right now Palantir is at 270 billion market cap. So if a year goes by and the market sees that this growth is not management's guidance is wrong, right? The growth just isn't happening. Then the stock price is going to correct, right, back to a reasonable level of growth. But if if
Yeah.
quarter by quarter we see good numbers, good growth, right? Management's guidance is making
So-
everybody on Wall Street really excited, and they keep getting new contracts secured. Then maybe
Okay.
in a year it could be trading at it could be 400 billion.
Okay, what do you think about this? Last time we had a conversation, remember we talked about pretty much going back to the mean, right? You say, okay, this stock should, one of the most reasonable ways to value a stock is say, okay, it should trade back to the mean of the P ratio, right?
That's like a whole concept in quant finance, I think, like mean reversion,
Mean reversion, exactly.
or in statistics broadly.
Yeah. So that whole thing, that makes sense, right? And that makes a lot of sense. And Tesla's another one of those examples where I sold all my shares last year at whatever, $300 a share or something, and the thing went to over 400. Once again, because the mean is sitting here at, let's say, I don't know, 75 times. And so was I expecting it to double and the P go to 150? No, I wasn't. That doesn't make any sense. So I mean, you're the odds are not in your if you're betting on that PE going way higher than the mean, the odds are not in your favor, right? There's a 5% chance. But in this case, Tesla did that and the PE doubled, and then you miss out on all that money. So I think that just goes back to even when the stock starts looking overvalued, especially when it's a hyped up growth stock like the ones we're talking about, then you want to hold at least a little bit of your position left just in case that 5% chance happens and the stock happens to go to some ridiculous valuation. You at least have some shares left to take some of those gains. So that's the part.
I think that's right. Yeah, I think that the circumstances when you want to sell literally everything are pretty few and far between.
I know,
even
and
though
I
I
keep
described
making
doing that with EOS, which I
Right.
shouldn't have.
And I do the
but
same thing. I did it with Tesla. I did it with Meta. The last 6 months, I've done it with a couple stocks. I
it's
don't
just
know.
hard not to when
Right.
you think a company is at one of its peaks.
Exactly. So it's.
Listen, I got to hop off in a couple minutes, but I'll leave you with this. Really, in like a minute, actually, I gotta run. But another good thing, if you're bullish on this, is something I feel like I don't hear a lot of people talk about too. But like, you can always buy like sector or industry specific indexes too. You know what I mean? Like a lot of people talk about buying these broad indexes like SPX and VOO and stuff, but let's say you're really really excited about energy
semiconductors
companies like EOS or semiconductors or AI, right? Well, I'm sure that Vanguard or State Street or there's so many ETFs and index funds out there that you can probably get for whatever niche you want. There's probably an index fund out there for you, right? And that gives you a little bit. It gives you exposure to that stuff without being so concentrated in one or two names.
Yep.
You know what I mean? Like I know people who after the CrowdStrike incident, which was like 6 months ago now or something like that. I know a lot of people who bought CrowdStrike, but I would be curious to see what would have happened if you had just bought a cybersecurity fund index instead and held it. I mean, I doubt you would have gotten the gains that you did if you bought CrowdStrike after that dip, but I'm thinking you'd probably still be in the green. So I don't know. Maybe later today I'll look at that and I can text you if that would have worked or not.
Yeah,
but
that's a good idea. Yeah.
It's always a good idea to be, maybe if you want to be more heavily exposed to some industries, you can always just buy these industry specific indices and ETFs and things like that. But anyway, guys,
all right, well, I'll catch
nice
you
to
later.
be on here again. I'll try to come on sooner than 4 years next time. But
okay,
you guys take it easy, okay?
All right,
too,
Paul.
Paul,
Talk
thanks.
to you later.
All right, so Nico, we do have a new setup at the studio.
We do.
So how you liking it though?
It's okay. It doesn't. It's definitely lacking for some things, but I guess if you're going for a kind of like a Jimmy Fallon type of vibe here, like a talk show thing, I could see it. It makes sense with that. But as far as news and weather reporting, I think it looks better the other way.
I think I love it.
You like it?
I had no vote on the matter, but I like it a lot. Though. I like it a lot though. But yeah. Once again, round of applause for Paul. Had to leave, but thank you once again, good sir. But yeah, next topic we want to get into.
I got a couple stocks to ask you about.
Okay, cool. First one I want to talk about is Alibaba. So Alibaba for like the past 5 years been a very up and down, mostly down stock, honestly. And I think with this presidency that we're in for the next 4 years, I think Chinese stocks, especially Alibaba, going to be going up on a little bit more. So I think the Chinese and American relations going to be eased up a little bit more.
Let's hope so.
But I think I bought Alibaba back in January. I think I'm already up like 20%. I think I bought it. I don't know if it's a 99 or like $100 or something like that.
99 or 100?
Yeah, around that like low $100 range. I did now.
And what is it at now?
Like 122, 123 ish.
125.
125. So.
Nice. Okay, that's good. Next one I want to ask you about is Texas Roadhouse. I bought a couple shares here. Nothing crazy, just to kind of get started here, because Texas Roadhouse is down. It's down from 205 in November down to now 171. And I've always seen good things about Texas Roadhouse. I've always seen.
I say buy in too. You know what? You seen Kava? Kava going crazy.
Kava, the stock or the restaurant?
The stock.
Let me see.
Stock has been going crazy.
Don't we? Didn't we? I think we just had one open up in Munster.
Oh, I don't know.
I think it just opened up in Munster.
I didn't even know what it was until like I was looking at it. I see Kava like a food restaurant. It's kind of like a Chipotle or something like that.
I think that's the place I went to in Nashville. When I was in Nashville, I think I went to this place a couple times. It's like it didn't remind me of Chipotle. It's like a Mediterranean like thing. I mean, I thought this was the one where you can only get food if you order online.
I have no idea. But it's pretty crazy. Like just in general with the Texas Roadhouse conversation, how food industry is like kind of like booming now.
Yeah, but Texas Roadhouse is one of those restaurants where it's like it's always packed there, and especially on all the locations are busy. Every weekend there's like a 2-hour wait there, so it's like. And their numbers have always looked good. Like, they're always growing. The net income's good. The PE ratio is not horrible. So it's just one that I feel comfortable getting into, especially as the stock trades lower and lower. You know, of course, right now with the stock where it's at, it's just like, again, I'm just buying a couple shares. But if it were to fall more, then I'd be happy to buy this one because it's just a solid business.
And they got, like, a good name, too.
Yeah.
Like, I think especially now with the internet, like, you got to have, like, a good name with a lot of these companies for them to make that boom or bust kind of potential. I think Texas Roadhouse really never seen any bad things about it though. But he said it's at 170 now.
170 down from 205.
I mean, to get on that too.
Yeah, so I like that one. Next one I started buying. I think I only bought a couple shares because you never know what's going to happen. It could fall more, and that is going to be the Trade Desk. And Ryan Fisher texted me about this one because he has a big position in this.
All right.
And of course, he bought this way cheaper, so he's not technically down in the position. But when you're up, let's say 300% or something, and now you're only up 150%, it feels like a lot, right?
Yeah.
It feels like you lost a lot of money. So because what happened was, I think they had a slight miss, or their revenue, something like that. The stock was a couple months ago it was 140. Now it's at 80. So it's almost down and cut in half, and pretty much knocked out all the gains it had for the entire past 12 months are now all gone. And so I started buying a couple shares of this one. And if you look back these last let's say 4 or 5 years, it's been up and down, trading at an average of about $70 a share. So the fact that we're now down back to that range of $80, it just makes me feel like this is a good spot to buy, because their business has come a long way these last 4 years. The numbers have gotten better. And so if the stock price is back down to what it's been at, it just feels like a good one to get into. And this stock is similar to companies like Palantir, where the valuation's kind of insane. The P ratio is over, at least the trailing PE ratio is over 100. We're looking at a $40 billion company. And so there is that. The valuation's not cheap. I think it's at 40-something times forward earnings, which is not cheap.
So they're involved with the AI?
No, so Trade Desk does this. Trade Desk, they are the middleman. They match up people buying ads and people selling ads, pretty much. So I think they work with Netflix. They work with a bunch of big companies, and they just...
Also those Amazon ads and all of that stuff?
That stuff. So they're just connecting buyers and sellers, and they have, it's really about the data. I think they're using AI for the software, but it's really about having all that data to get the best connections in terms of buyers and sellers of ads. So Trade Desk it has a good reputation. There's a lot of people interested in this one, and I think there's a lot of positive expectations for this company, and that's why the valuation is so rich. But again, the stock's down, so I'm happy to start buying this one. At this point, I say it's 50-50. It could go up from here, and it also could fall a little bit more from here. But either way, I win, because I'm either buying it cheaper or I'm either going to make money. So TDD is another one I like.
So to pivot real quick from stocks that we buy or whatever, who do you think is going to win? Like, what company do you think is going to be on top of, like, the AI stuff?
Well, that's tough. I think there's a lot of players in a lot of spaces, right? You have NVIDIA designing the chips, and then you also have things like Microsoft and ChatGPT. You have Meta doing one. You have Apple integrating stuff. So there's a lot of different ways to look at it. Then you have these newer startups like C3.ai, where it's a little bit more speculative. And another interesting one I've been looking at is SoundCloud. SoundCloud is like transitioned into this.
Really? So
yeah.
Like the music?
Yes, they changed their name and stuff to where now they've transitioned. And now the stock is called SoundHound AI, and the description says development, commercialization of voice, sound, and natural language AI technology and activities. So that one came out of nowhere. Now this stock this past week is down 30%, so it's come down a lot. But it's an interesting one, because if they partner with the right person, the stock could blow up a lot. The market cap's only $4 billion. So then you got players like that, where you can, try to invest in AI through these smaller companies. But generally, Adobe's another one of the stocks that I own, where those huge tech corporations.
I bought back into Adobe too.
Yeah, the Adobe, the Meta, the Apple, Amazon, when those companies integrate AI into their stuff, I think that's just going to help them grow more, become higher profit margins, and all that stuff. So
do you think that Apple Intelligence stuff been kind of disappointing?
The Apple Intelligence?
Yeah, like I just got the update on my phone with it. I'm kind of disappointed. I kind of expected a little bit more.
So I don't know about that. What I do know is that I think Siri has a long way to go in terms of catching up with things like ChatGPT, because the last 6 months, 9 months, I just have noticed there's just such a large gap between how far ChatGPT is, how far ahead it is than something like Siri. So Siri, they need to do some work on Siri, because it doesn't provide the same.
Claude is nice too.
Which one?
Claude, CLAUD.
I haven't used that. I've used the Google one when Google search and stuff. I've used. I haven't used that DeepSeek Chinese one, which that's whole nother interesting topic we can get into.
Oh, yeah.
But I don't know. It's tough. How Paul said, you could do an AI index fund, which I don't know if we can find one of those right now. But let's see. I don't know. We'd have to do some research on that. But yeah, I mean, in terms of investing in AI, I think still it's the big players that are going to integrate it and benefit, and those are safer investments. And then if you want a riskier investment to make more money, then you do one of those. You research some of those startups like C3.ai or SoundHound, and again, I would make it definitely a smaller position and just try to follow along and see what partnerships they get and see what happens.
Right. Next thing we got on the list.
Next thing we got on the list is the delusion score, which this kind of stems off of our conversation with Paul, but this is something that me and my boss were talking about because how we just talked about, you have these stocks like Palantir, Tesla, Nvidia that are, of course, they're super innovative, but why are they trading at these ridiculous valuations of 300 times earnings? And you can kind of grade it instead of saying, okay, we're just going to look at PE. It's almost like you need to have a delusion score because that's what's pushing these stocks up to these ridiculous valuations. You know what I mean? So you almost have to factor that in is how delusional are investors for this stock? And that's how you can compare them. Because you obviously can't compare them with the PE ratio because these stocks don't care about that. Why is Palantir trading at between 200 to 400 times earnings for the last couple of years? It doesn't make any sense. And you could say,
do you think Palantir is kind of like GameStop, one of those meme stocks or anything like that?
It's similar. It's very similar, but it's Palantir probably has a more locked-in, solid business with more growth and it's a legit company.
Way more legit than GameStop.
Way more legit, but the just like how GameStop got hyped up and got Wall Street bets on it and all that stuff, it's very similar to these other ones like Tesla and Nvidia and what are we talking about here? Palantir, right? So
yeah, I was gonna ask, like, what's the big difference when you say that with Nvidia or Palantir then?
Because
those are huge.
And Nvidia is probably, that one's not that bad, to be honest. Tesla has gone ridiculous at $400 a share.
Yeah,
that one's ridiculous, and Palantir is ridiculous at probably it should be less than half of what it's at. 120 now. It should be easily under $60. So I'll say anything above 50 is kind of ridiculous for Palantir. And
so
then,
when Tesla jumped up when Trump got elected, even when Trump coin went up, when it got elected, do you think that was fine, or
what do you mean?
You still think that has some sort of
the Trump coin or what?
Or just
or Tesla?
Tesla in general.
No, okay. So after Trump won, Tesla stock benefited a lot. Obviously, people thought, okay, him and Elon have this connection, this relationship now, that it's going to help. Well, guess what? First of all, right off the bat, we saw that he took away the EV mandate. That's definitely not. I'm not trying to say Tesla needs that, but it's definitely not helping them, right? So you have that, which who knows how that conversation went. I'm sure Trump and the other Republicans there pretty much said we don't want this.
I think the EV mandate doesn't affect Tesla because without it, Tesla will still make
exactly. And they have other business. I mean, obviously, the cars make them the most amount of money, but they still have energy. They got robots. They got all this stuff. And
yeah, that EV mandate affected Ford, Toyota.
You think so? Oh, you're saying in the prior years?
Yeah.
Yeah, in a bad way, it affected them kind of. Yeah. So yeah, there's that's definitely a part. Now, as far as Tesla should be able to trade at a ridiculous valuation just because Elon and Trump have a strong relationship. I don't really buy that either. I mean, okay, just because the owner or the CEO is friends with the president, obviously that helps. Obviously that's a good sign. It doesn't mean that the valuation of the business can just skyrocket to whatever valuation it wants, though. So I don't.
Yeah, but that's the same conversation we were having with Paul with the Boeing stuff. Government mean kind of like a support.
It's a support thing, and it's definitely a good sign. It's a catalyst in the right direction. It does not prevent you though from losing money on the stock, and it should not take the place of having a reasonable valuation for the business. Sure. That's the way I feel about it. So I don't know. We'll see what happens with Tesla and Trump and Elon. We'll see. I mean, I think it's funny that Elon is, he's getting more and more involved and more powerful, how Paul said, almost every single day.
Yeah, more kids and that too, more baby mamas.
I know, he's got at least 12 kids. I saw Ash12 was hanging out in the Oval Office the other day. So it's,
I mean, you got to think about it like this.
It's fun to watch.
Like back in the day, people were kind of poor. They were poor. They were having 10 plus kids.
Right.
At least he's up billions.
At least he can afford it, I guess. Yeah.
That child support guy go crazy.
Yeah, I know. Yeah, I know. But he's got the money. I doubt
he probably don't pay child support.
Yeah, who knows? All those kids are probably billionaires right now. But
man, definitely. I told you If my dad's a millionaire, guess what? I'm a billionaire.
Well, I don't know about that, but it's close to that. The last one I got on my list, well, I got Meta and I got Coinbase. So Meta has just been, all I can say is I wish I'd kept my shares. That's all I can say. Meta has just been,
me too.
never saw this one coming. This one is.
You know what? We didn't see it coming, but we should have.
We should have, and yeah, I mean, it's just look at that. Look at that run here. We're talking. This thing was just 2 years ago. It was $100 a share. Now it's over that we would have 7x their money, and we're not talking about. This isn't C3.ai or some speculative company that loses money. This is Meta Platforms that has a market cap of over $1 trillion and is one of the biggest companies in the world. We could have easily bought into this, and it was a safe investment, especially at $100, $200 a share.
Yeah, it's just that I was like so scared with the Supreme Court stuff. I kind of like backed. We all kind of like backed off it.
I just sold too early. I sold at whatever 350. No, not 350. Like 450 or 5.
Yeah,
or
you
something.
sold too early. Yeah, you sold too early.
Yeah, you see, and it's just so much money I missed out on. But all I could do is learn my lesson, and I don't know. I hope I get back into this one.
Hey, you got SCMI?
I got SMCI. Yeah. There's different ways to look at it.
AMD. I always loved AMD.
That one hasn't made me any money yet, but
soon
we'll see.
Soon.
And then finally on my list, we got Coinbase. It looks like they had a huge beat on earnings and revenue. They said trading revenue on the platform was up 185%. Crypto's been going crazy this past year. And then they also said that since 68% of their revenue comes from trading on the platform, they're also aiming to diversify their revenue streams, which we'll see how they do that. But it's mainly for crypto, so I would assume that that's how they're going to make most of their money. So we'll see what happens. But is there any other stocks you're buying?
That's it. I invested in the index fund. What's the S&P?
SPY.
SPY and the VO.
And VOO.
Mm-hmm.
Those are good. I like those. I always do the NASDAQ instead. I always get QQQ instead.
QQQ, another one I was looking at too.
Yeah, I like those better. They just seem to outperform and stuff. But
yeah, I feel like we talked about this like as New Year's resolutions. Investing in index funds.
Yeah, you're probably right.
Yeah, so I think I'm investing in index funds now.
Yeah, but I think that's all for me for today.
Yeah, I'm good. I don't know what the next episode is gonna be.
Could be a couple
but you
weeks.
know what? We've been kind of doing good though. I think this fourth episode.
Third week. I think it's third week. 3 weeks since our last one.
Okay,
but I got a lot of guests lined up, so hopefully, roughly 2 weeks from now, we can get one of these other guests lined up and more stuff to come.
But yeah, thank y'all for tuning in. Thank you for everyone that's listening to us on Apple Music, not Apple Podcast.
Apple Music, they listen to us on.
Apple Podcasts, my bad. Spotify. Also on.
I am on Apple Music if you want to hear my music though. So.
Yeah, tune in to Nico Criticals, playing the guitar. But yeah, once again, thank you all for people listening to us on YouTube as well. Also on WJOB 1230 AM, 104.7 FM in Hammond, Indiana. Thank y'all once again, and y'all have a blessed one, and to greener days ahead. Bye bye.